Hello fellow traders, Marv Eisen here from Timeless Dollar Trading Academy. It's Monday, July 28th, and resistance was at 64.47, support at 64.16, previous close, Friday's close at 64.26. Now, as I've said so many times in my previous videos, and I share what I know, I share my knowledge, when prices open in the middle of the trading range, it's probably better to maybe not trade, because when prices open in the middle of the trading zone, it introduces an element of risk that we really shouldn't take on. As traders, the only way to stay successful and viable and solvent over the long term is to try to eliminate risk as much as possible. And whenever we see something that introduces risk, like prices opening in the middle of the forecast trading range, that introduces risk that probably not good to take on. There are plenty of opportunities in trading, and we certainly don't have to trade every day. So the market put in a high, let's see, and this is during regular trading hours, 64.34, right? 64.34 and a low of 64.09. So only a 25-point range, and the range was forecast at 31 points. So prices didn't transcribe the range that was forecast, and the forecast, of course, was from the trading calculator, Taylor's trading calculator, trading zone rather. 64.47 resistance, 64.16 support, 31-point range. Prices only ranged about 25 points. We see risk was introduced right at the open. So what do we know at the open? Well, we know the trading zone. If you have the trading zone, you can put it on your chart. 64.47 resistance, 64.16 for 64.16 support, and the previous close 64.26. Of course, if you don't have the trading zone, all you have is the previous day's close, 64.26. But if you have the trading zone, not only do you have the trading zone, which is the range of likely area of where prices are likely to trade, but you also see that prices are opening up in the middle of the trading zone. And as I've just told you, when prices open in the middle of the trading zone, it introduces an element of risk that increases the overall risk for trading for the day. And so here's how prices traded for the day. You can see it. And so for those of you who traded for the day, maybe you made some money, maybe you didn't. And so gap, support and resistance, trend, time and price, momentum, and candlestick, those are the 6 trade setups. I really don't see too much, except right over here, there is a potential trade right over here at about 11.18, where prices moved down to the trading zone support and then quickly moved up. And as they moved up, we can see we can ride it up again to the previous day's close, 64.26. So possibly an 8-point trade for the day. Not a great trade, not a great opportunity. And so as prices move down for the day, nowhere to see that that's going to give us any kind of odds. I don't see that this would have been a particularly good day to trade. Now, where are prices going? And as I've said, risk is the enemy of trading. Now, for that, we look at the economic calendar. And this week is a particularly risky week for trading. And here's why. On Wednesday, July 30th, we have the ADP employment report. Employment reports tend to move the market. And so we have the ADP employment report on Wednesday. And we also have at 2 p.m. the FOMC interest rate decision. If I were you, I would just not even open my computer on Wednesday, July 30th. Too much risk. The ADP employment report pre-market and the 2 p.m. FOMC interest rate meeting. And then on Friday, August 1st, we have the U.S. employment report. And these are 3 announcements that are going to move the market. And so we don't know which way they're going to move the market. There's a chance to make a lot of money very quickly. There's a chance to lose a lot of money very quickly. My recommendation, stay out of it. Why? Because risk is the enemy of trading. And so whenever you see that there are announcements that are going to move the market and create risk, stay away from it, okay? And so where is the FOMC going to set interest rates? Now, the CME FedWatch tool, the current target rate is 4.25 to 4.50, and the expected target rate is 4.25 to 4.50. 97% chance or odds that the Federal Reserve will keep interest rates as they are. But of course, President Trump is pressuring the Federal Reserve and Federal Reserve Chairman Powell to lower interest rates. Now, my expectation is, and I'm going with the 97% forecast or probability that interest rates will remain, my forecast is that the Fed will hold interest rates steady. Now, of course, if and when Donald Trump names his own Federal Reserve Chairman and interest rates decline, that'll be another story. That brings another element into it, and I'm not going to go into it in this video. But I just wanted to highlight that risk is the enemy of trading, and so anything that introduces risk into our trading should be avoided. So that's my video for today. Thanks so much for watching. I'm Mar Risen of Timeless Dollar Trading Academy. Trade safely, use lots of patience, and I'll see you in my next video.